Hey, what is going on, everybody? Welcome back to the channel all about real estate. In today's video, we are going to take a look at a short video clip that actually talks about the 70% deficit in inventory in housing. In addition to that, he talks about the cost to borrow and how mortgage rates have gone through the roof and the impact that it's made on millions of home buyers. I found the video clip very interesting. I hope you will too. Without further ado, let's jump right to it.
Joining us now is Andy Walden, Vice President of Enterprise Research at Black Knight. Obviously, the more of your monthly paycheck that goes into a mortgage payment, the less you have for the actual house, for the down payment. And so how does this all shake out in terms of affordability?
I mean, if we look at what's happened so far this year, just driven by the record levels of home price growth that we've seen, plus the 1.75% rise that we've seen in 30-year rates, you're looking at payments going up by about $400 per month for folks just buying the average home. That's a 30% increase over the first 3 months of this year. And if you extend that horizon back to the beginning of the pandemic, you're talking about over a $650 per month increase.
All right, so just in the last 3 months alone, interest rates have gone up about 1.75%, almost 2%. They're hovering in the low 5% range today. That has impacted the actual cost to borrow on average by about $400 per month just this year alone. But if you go back to 2020, just pre-pandemic, and you look at the change in interest rates and the rise in prices, it's over $650 a month higher cost on average.
I wonder if it's not necessarily the actual amount, but the shock of it. The fact that it has gone up so quickly. And so you could have been in the market for a house, and this is a process that takes months, and then all of a sudden you do your mortgage calculator once again, you find out that you can't afford as much house, and this has only happened over the past few months. How does that sort of psychologically impact that home buyer?
I think it has a big impact, and you couple that with the record low levels of inventory out there. I mean, we have 800,000 fewer active homes out there on the market, which is about a 70% deficit in inventory. So if you look at it from a home buyer perspective, they're being hit by record levels of home price growth. We're seeing the strongest interest rate increases that we've seen in 27 years, and now you're looking at record low levels of inventory as well. They're really being hit from all angles.
Okay, so I would agree with this 110%. There are so many cross currents at play. It's making it very challenges for buyers to get involved in this market, particularly first-time home buyers. So you have the rising cost in mortgages, which has decreased purchasing power for many. So let's say, for example, you had some debt-to-income limitations as far as qualifying for a home purchase. Let's say your budget a couple months ago was $500,000. Well, this sharp rise in interest rates has probably reduced that purchasing power by about 20%. Now, in addition to that, you have still record low inventory. There's no surprise there. Inventory's been low for the last, 24 months or so, but that's certainly a cross current for these buyers.
Do you think this slows down mortgage originations? I mean, does it get to the point where people stop looking for that house?
I mean, absolutely. I mean, if you look at it just in terms of overall originations, and refinances are a big component of that, 90% of mortgage holders have an interest rate below where the going rate in the market is today. So absolutely an impact from the refinance perspective. Cash outs have been holding that strong, but cash outs are starting to get hit now that interest rates are increasing. And I think you're going to see from a housing market perspective, both the demand side, right? The purchase lending activity, the home sale activity is going to be hit, but the supply side as well. If you look out there in the number of listings. So I think you're getting hit from all angles. I mean,
all right, so there's a lot to unpack here. One thing that I didn't know is that he mentioned that 90% of all homeowners out there have a rate below, I think he said 3%. And of course, he alluded to the fact that refinance applications are down. A lot of folks were trying to do cash out because they have record amounts of equity in their property. So they're looking to borrow against it and use some of those monies for renovations or paying off credit cards or debt consolidation, things like that. But the challenge is like, let's say you owe $300,000 on a property that's worth $600,000, and you want to borrow another $100,000 to do some debt consolidation and pay a few things off. Well, now you have to restructure all of that debt in the 5% range because that's where the going 30-year fixed rate is today. Now, he touched on supply issues a little bit, and these low rates will actually exacerbate the supply issues in my personal opinion. And the reason that is because I think more homeowners are going to be less likely to want to list their home and buy in this market. Because if you list in this market and you have that 3% 30-year fixed rate mortgage and you sell the property at a record high price, well, now you're looking to purchase again in this market You're going to be looking at rates that are in the high 4s, low 5s, and it's going to be at a higher price point. Now, when you purchase a property at a higher price point, that comes along with not only a higher interest rate right now, but also higher property taxes. If it's a bigger home, more utility expense and things like that. So people are going to be really kind of hoarding those mortgages and thinking twice before they make those upgrades. In addition to that, I think some folks are just like, you know what, we're happy with what we have. Maybe we'll just add on or do some construction, clean up the property, and just stay put.
Did most of those ARMs that, 5 years, 10 years ago that were originated, did people refinance into a fix? I mean, should we be worried about these people all of a sudden being faced with huge mortgage payments?
Yeah, I mean, the ARMs are a much smaller component of the market than they were back in 2008, 2009. That was a big lending cohort back in 2006, 7, 8 during the last run-up. Not nearly as much now. You're seeing a little bit of increased activity now that the spreads are wider and ARMs are a little bit more attractive.
Yeah, the adjustable rate mortgages are really not a concern at this point. Many of the folks who were in adjustable rate mortgages have since refinanced. They've gone into a fixed mortgage product. And a lot of the indexes that these adjustable rate mortgages are tied to, they're still hovering at all-time record lows. If you're in an adjustable rate mortgage, it might be a good time to look at a fixed mortgage, because with rates kind of starting to go up, that payment is likely to continue to rise here in the near future. But there just a very small sliver of the market is actually still in those adjustable rate mortgages. Now, oddly enough, those products are starting to become more popular because they are priced better than a 30-year fixed mortgage. So what I've seen a little bit lately is that some of these mortgage some of these lenders that are out there are starting to offer the 7-1 ARM. They're starting to offer a 10-1 ARM. Basically, that product is fixed for a 7-year period, and it can adjust based on the market after that, or fixed for a 10-year period and then can adjust after that. I would say the vast majority of borrowers out there are maybe 80% of borrowers, 90% of borrowers are just looking for your plain old 30-year fixed rate mortgage, and for good reason, right? Even though the adjustable rate mortgages may be priced about 0.5% lower than the 30-year, it obviously still can adjust. All right, well, that is going to do it for today's video. I hope you found the information useful. That's all I have for you today. You guys have a wonderful day. Take care.